ಗುಡ್ ಮಾರ್ನಿಂಗ್. ಇವತ್ತು ಮ್ಯೂಚುವಲ್ ಫಂಡ್ಸ್ ಬಗ್ಗೆ ತಿಳ್ಕೊಳ್ಳೋಣ. ಅದಕ್ಕೆ ಮೊದಲು ಕಳೆದ ಒಂದು ಸೆಷನ್ನಲ್ಲಿ ಫ್ಯೂಚರ್ ಕ್ಯಾಪಿಟಲ್ಸ್, NBFCs, ದೇರ್ ರೋಲ್, ದೇರ್ ಫಂಕ್ಷನ್ಸ್, ಇದ್ರ ಬಗ್ಗೆ ನಾವು ತಿಳ್ಕೊಂಡಿದ್ವಿ. ಸೊ ಇವತ್ತು ಈ ಒಂದು ಮ್ಯೂಚುವಲ್ ಫಂಡ್ಗಳ ಬಗ್ಗೆ. A mutual fund is a common pool of money into which investors place their contributions that are to be invested in different types of securities in accordance with the stated objective. An equity fund would buy equity assets, ordinary shares, preferences shares, warrants, etc. A bond fund would buy debt securities such as debenture bonds or government securities, money, market securities. A balanced fund will have a mix of equity assets and debt instruments. Mutual funds shareholders or a unit holder is a part owner of the fund's assets. These are the myths about the mutual fund. Mutual funds invest only in shares. They only invest in share to buy or sell the shares. Mutual funds are prone to very high risk activity traded. Mutual funds are very new in the financial market. Mutual funds are not reliable and people rarely invest in them. The good thing about mutual fund is that you don't have to pay attention to them. These are the facts about mutual fund. Equity instruments like shares are only a part of the securities held by mutual funds. Mutual funds also invest in debt securities, which are relatively much safer. Mutual funds are there in India since 1964. Mutual funds markets has evolved in USA and is there for the last 60 years. Mutual funds are the best solution for people who want to manage risks and get good returns. So this is the cycle process of the mutual fund. Investors pool their money with fund managers, then they invest in securities. It will generate the returns, then pass back to the investor. The history of a mutual fund. Phase 1, 1964 to 87. In 1963, UTI, Unit Trust of India, was set up by Parliament under UTI Act and given a monopoly. The first equity fund was launched in 1986. Phase 2, 1987 to 93, non-UTI public sector mutual funds like SBI Mutual Fund, Canara Bank Mutual Fund, LIC Mutual Fund, Indian Bank Mutual Fund, GIC Mutual Fund, and PNB Mutual Fund. So phase third, 93 to 96, introducing private sector funds as well as open-end funds. In phase 4, 1996, investor-friendly regulatory measures action taken by SEBI to protect the investors and to enhance investors' returns through tax benefit. Thank you.